Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A third bearish black crow on Friday, but it was nevertheless an interesting session as it was a second consecutive close below the small March-based dark blue descending triangle pattern made up from the overhead July 2017 to November 2018 head and shoulders neckline, currently 109.44, and a small March-based uptrend, currently 108.97, as well as below the neck at 108.20 of the small March-based double top. This move lower was all due to the overhead resistances provided by the head and shoulders neckline and the 50% Fibonacci line of the January 21 to September 22 move at 109.44. It is also a follow-on lower from the earlier important bearish belt hold pattern. I can't emphasize how important that pattern was. Belt hold patterns are one of the more successful of all the patterns with a success rate of nearly 7 out of 10 times when they occur. This now sets up some potentials below for the ascending triangle. This is a primary target X at 107.60, which is not too far away, and a secondary harder to achieve target X1 down at 106.95. The primary target X is down at the first support below, which is the May 2020 low at 107.66. And the secondary target X1 is just under support of the 50% Fibonacci line of July 23 to February 25 move at 107.09. Meanwhile, the double top has a primary target X2 down at 107.53 and a secondary harder to reach target down at just above the same level as target X1. On top of all that, last week the market made a weekly key reversal down at the top of the recent market. This at least temporarily lays at rest the idea of the market contemplating a possible annual key reversal pattern. However, would still continue to keep an eye overhead at the September 2024 high at 112.13. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that, starting with this 50% Fibonacci line and the shallow dark blue neckline. The 50% Fibonacci had previously capped a reactionary rise back in November last year, plus now this bearish belt hold pattern formed. It should be noted that between the primary and secondary targets below we have the flatlining gold long moving average, and that's currently at 107.25, and that may act as support. Now so far today a lower open but a reactionary move back up straight away, though still within Friday's range. Though looking like a possible bullish engulfing pattern and bullish double right now. Cable, aka sterling against the US dollar. A second bearish black crow and a follow-on to the previous session's key reversal down right at the top of the recent market. Overhead, we still have the secondary hard to reach target X1 up at 131 even for the breakout from the January to early March dark blue ascending wedge pattern. In the way, we have the November 2024 high at 130.47, whilst below we have the November 2020 low at 128.52, which acted as a support 2 weeks ago. And then the flatlining gold long moving average below that, currently 127.99. As I recently said, I will continue to keep an eye overhead at the September 2024 high at 134.34. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that, starting with the low of December 2020 and a high of July 2023 at 131.33 and 131.44 respectively. Now so far today, and we actually move back up, pushing up through Friday's high and right now looking like a possible bullish engulfing pattern and key reversal up, if only just on the latter. US dollar against the Japanese yen. A long commentary here, I'm afraid, but a necessary one. A second bullish white soldier on Friday after the previous session's indecisive doji cross and earlier key reversal down and bearish engulfing pattern. Now, you could argue that the 3 sessions together make a possible 3-day bullish morning doji star pattern, but I think you would be stretching credibility a bit by doing so. Interestingly, the market did try and push once again up through the immediate overhead resistance of the 50% Fibonacci line of the July 23 to July 24 move at 149.61, but failed. Beyond this, we have another 50% Fibonacci line, the one for the whole of 2024 at 150.76. Overall, the market is countering some of the more recent bearish patterns, whilst remaining within the larger one, the big picture bearish item, and that is the bright red July 24 to January 25 bearish Andrews pitchfork. This pitchfork shows the bearish angle of attack of this market, and we are right now in between the overhead upper time, currently at 152.02, and the middle time below, currently at 136.73. However, we had recently seen some hesitation in a smaller near-term bearish pattern, the oft-mentioned early December 24 to late February 25 rounded top pattern. We have formed the rounded top itself and started the exploitation of the downside. We have started hesitating. Now, the primary target area for this pattern has already been reached, but the secondary, much harder to reach potential, in this case, much harder to reach potential, is down in the 138.40 zone. I've taken the decision for now not to assign it as a target because after all it is so far down below the 2024 low in September. It would bring up all sorts of questions if that happened. The primary one would be if it would form a very rare annual key reversal down here. In the meantime, we have another more immediate pattern problem here, highlighted in pink on my daily chart. An early February to date descending wedge pattern, currently 144.5 to 147.14. This pattern had been the very recent driver lower and helped the rounded top reach its primary target. However, despite closing over the upper trend line of this pattern, we have seen only limited exploitation on the upside. Yet I still have laid out some potentials for this break higher out of the descending wedge pattern of a primary target X in the 153.59 area and a secondary harder to reach target X1 up in the 156.68 area. Both of these targets are outside the bright red bearish Andrews pitchfork and may raise questions as to whether or not to finesse the bright red bearish Andrews pitchfork into a shallower bearish shift pitchfork. But that would be passé if prices turned lower again. Now, so far today, a slightly higher open and piercing of the overhead 50% Fibonacci line at 149.61, but not really a thorough attempt, and prices are back down on it and just below it. US dollar against the CNH, the offshore Chinese yuan. A second bullish white soldier on Friday and the first clear close over the bright green upper time, currently 724.55 of the breached, now seemingly repaired but breached again, late December 24 to late January 25 bearish Andrews pitchfork. Now further below we still have the flatlining gold long moving average, currently at 721.92, and the lesser Fibonacci line excuse me for that coughing fit, and the lesser Fibonacci line at 721.80. However, overall we are still within the dark blue January to March 2025 descending wedge pattern, which is currently 720.99 to 726.95. Though I've been thinking that the gold long moving average may be standing as a proxy for the lower trend line, and maybe I should finesse the bright green bearish Andrews pitchfork into a shallower bright green bearish shift pitchfork. I'm also thinking that the descending wedge pattern may be taking over as the recent showrunner here from the bearish Andrews pitchfork. This all continues to put at risk the gold long moving average below, as well as the May 2020 high at 719.64, and even the current bright green middle time. Overall, we also have the opportunity to look at the whole late November 2024 today action as a double top, even Adam type, though we've not as yet broken lower from this pattern. I would nevertheless continue watching very carefully the market's actions and response on any approach to the gold long moving average below. Now, so far today, a move higher, utilizing the breached bright green upper time as a base of action and pushing up through the bright red upper trend line, currently at 725.62 of the January to March 24 ascending triangle, but halting ahead of the dark blue upper trend line. US dollar against the Brazilian real. A second bullish white soldier, almost a bullish open and close white Mariposa on Friday after the previous session's actual bullish open and white and close white Mariposa. The move up was halted by the overhead gold long moving average, currently at 573.71. We are nevertheless still below both the bright red breached May 2024 to May 25 uptrend, currently at 580.76, and the gold long moving average. Now these two have been guiding prices high for 4 weeks prior to the break lower. Additionally, the top side has been capped by the bearish pressures from the March 21 high of 588.04 and especially capped by the mid-December 24 to date dark blue downtrend, currently at 578.01. Now in the even bigger picture, we are set up for the market with a week left to go for the market to make a possible monthly key reversal down in March. Thus, if we close on Friday the 31st of March, Monday the 31st of March, let me get that right, Monday the 31st of March, either over 591.77 or under 567.49, then we'd be on. Anything in between will have the lesser outside month pattern. At the moment, we have moved up from a possible monthly key reversal down to a lesser outside month pattern. Now looking below, we have the support of the lesser Fibonacci, 38.2% Fibonacci line at 565.07, which is a gateway to congestion from June to October last year between roughly 565.07 all the way down to about the flatlining purple neckline of the June to September last year head and shoulders continuation pattern, currently at 540.51. There are not many nearby defined support lines below until you drop under 545 even. Finally, we still had target X below in the 563.35 zone. This was the primary target for the drop down from the large early October 24 to mid-January 25 rising expanding wedge pattern. Now this target was achieved last week. The harder secondary target X1 is down in the 541.95 zone, and that is still live. US dollar against the Mexican peso. A bullish opening white Mariposa on Friday and third bullish white soldier. It was a continuation of the move up and away from the middle of last week from the significant support below the previously highlighted congestion zone between 1987.96 to 1991.31. However, in the larger picture, we are still seemingly stabilizing under the bright red lower bull channel line, currently at 20.32.08, of the very gently rising early November 24 to early March 25 bull channel, currently 20.32.08 to 21.08.18, that has become a rectangle top pattern. We've already reached down and achieved the primary target for this pattern at 1985 even, but we still have opened the secondary, harder to reach target X1 down at 1948.90. Now looking further down, we have the April 2022 low at 1971.68, and that is just above the gold long moving average, currently 1972.97. Now so far today, a small dip down to the October 22 high at 2017.20. But no more than that right now. We seem to be getting caught now between the overhead bright red breached lower trend line and the gold long moving average below.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.